We're looking at maybe a little bit of M&A coming to bear. We're seeing phenomenal valuations on the public market with a new $4 trillion company, if we can retain it back for Nvidia, and that $400 billion private valuation for SpaceX. Can we sustain these sorts of valuations, Scott?
Hey, Caroline, long and short, yes, I think we can. And the reason why we probably can is because these companies are growing into the valuations that the market is placing upon them. This is not like, not like the 90s where those companies really sort of got ahead of themselves and weren't making enough money to justify the valuations ultimately. But these, this generation's tech companies, have ROEs in the 30s, and that is a very sustainable kind of valuation metric that we can use to say, yeah, this is pretty sustainable right now. Like we're not in bubble territory anywhere close to it.
I mean, return on equity looking still healthy and not too eye-watering. Scott, will that be vindicated in the earnings season that we're about to get? Will Microsoft, will some of these, particularly the hyperscalers, be able to commit to the spending that drives Nvidia yet further higher?
Yeah, that is obviously the trillion-dollar question. Like, do we get continued growth and continued upward pressure on those ROE kind of metrics? You get the ROE expansion by having additional profitability, additional margin expansion, and just overall just better execution on the business side. And if these companies can continue to do that, then there's no reason why we can't be substantially higher in a year from now in many of these companies than we are right now. Our expectation is that that's going to continue. There's no reason why it really shouldn't at this point. We are still early stages of the AI revolution. And that is our expectation currently.
I mean, I guess the extraordinary matter of all of this is, of course, we saw the biggest sell-off ever in a market capitalization of Nvidia just in February because of the worry of DeepSeek. But we also have the tariff anxiety that just doesn't seem to impede its valuation. Is that something that could knock off valuations, or do you think we're getting numb to tariffs?
We're definitely getting numb. I mean, look, the market is not trading like it used to in April based on the tariff headlines. You see there's just sort of a diminishing return towards the shock that the market is able to absorb with these. Because now we think we understand what the playbook looks like. Playbook looks like, talk tough and then eventually find some way to get a deal that's acceptable to everybody. And if that continues apace, then there's no reason why why the market can't sort of sustain these types of levels. But getting comfortable with the way that the tariffs are going to end up going and figuring out the market, frankly, is starting to figure out that there's not really an alternative still to Nvidia and some of those chips, despite despite some of the DeepSeek stuff. And that's why we've recaptured these all-time highs in valuations.
It does seem to be a story of AI winners and then the laggards. And where talking tough has really got hard today is on Apple. Once again, Peter Navarro calling it out, saying they think they're too big to tariff. Are we just going to see more money pile into the infrastructure layer? Or at what point are we going to start to see companies winning out with the application of AI, which thus far Apple doesn't seem to be on top of?
Yeah, we think that's probably a 2020, like late 2025, early 2026 story. As we move from the the makers of the stuff to the users of the stuff, and that's probably going to be the most important investment call to make as we come into next year, is like figuring out which companies and which sectors are actually able to use the AI technology, which is amazing, to increase profit margins, to increase productivity. And that we're spending quite a lot of time on that here at Horizon, and it's something that we're actually pretty excited about. But the focus and the intense focus we've had on the infrastructure side, it's probably not going to go away. It's not going to be diminished, but it's going to broaden out towards more towards those users and some of the ultimate winners in the space, which are always the users of the technology rather than the makers of the technology.
I mean, I know you say it's still early days, but can you give us an inkling of where you're getting most excited about? Is it the healthcare space? Is it elsewhere?
Healthcare is definitely one of the top of the mind in terms of the people that can use this to just really speed up the drug development. Is there like an obvious application for some of these things? I mean, the exciting thing, Caroline, though, I think, is we don't really know what's around the corner. I'm not smart to figure out like what the next shoe to drop is and like which companies and sectors are really going to take, especially like the agentic AI, and into the next level. And so we are spending a fair amount of time trying to figure that stuff out right now. But I don't know what I don't know, and that's actually some of the most exciting parts about this. Is really have to stay front-footed and do the research and just listen to what you're seeing.
And Scott, therefore, do you take money out of prior winners to allocate to the future ones, or are you taking out of just lagging industry groups that you just don't want to be allocated to at the moment?
I think it's more you probably do take some out of the infrastructure plays. You take some out of the prior winners, some out of the Nvidias of the world. But like as I said earlier, Caroline, it's more of a broadening play. So I think you actually increase the overall allocation towards AI in your portfolio, and you're taking out some of some of like the Nvidias of the world. You're also taking out of like industrials. You're taking out of so like utilities. You're going to take it out of some of the more boring like staples types of things. You probably just want to allocate out of those types of sectors and just overall increase your breadth of your AI in your portfolio.